Hey everybody, wanted to quickly touch base today and kind of do a market update on some things coming down the pipeline on a national level. So if you've been watching recently in the news, we've had some positive information coming from the Fed chairman talking on September 18th when they meet next. They will likely reduce that Fed's fund rate because of some positive information we had. The biggest one being the inflation numbers. Their target rate for inflation is to get it down closer to 2%. And we have slowly been working our way down there. We're not quite there yet, but we're close enough that I believe that they're going to go ahead and make some changes and reduce that Fed's fund rate. Now, one of the key things on inflation that we need to remember is it is how quickly prices are rising. So even if inflation is coming down, what it means is it doesn't mean we'll get a reduction in prices of different goods and services. What we will see is a slower rate of price increases. So prices and stuff will continue to go up, maybe not change as quickly with that inflation coming down, but we do expect to see some change over that. So that's an important piece of the information. Now, most of the time people see Fed fund rate, they're talking about taking it from 5.25 down to 5. And so that does not mean that interest rates will be at 5%, right, for mortgages. So the way that mortgages work is they actually tend to track closer to the 10-year Treasury note, and they'll be so much above the 10-year Treasury. So if I'm using the example, if the 10-year Treasury is tracking around 4%, then it's typically somewhere around 1.6, a little more than 1.6 above that. So in my example, it would mean interest rates would be 5.6. Now, what we have seen over the past year or so is that the 10-year Treasury, that margin above, has been significantly greater than the 10-year Treasury. It's not staying around that average of 1.6, but we expect to see that come down as this Fed funds rate comes down. The companies that are buying your mortgages, right? If you've recently done a mortgage or done a mortgage even in the past 10 years, you probably remember the bank or the lending institution that did your loan sold it to another institution, usually within a couple of weeks after your loan. So those groups that are buying the mortgages are the ones helping determine the rates, because it's what they're willing to buy those mortgages for with those interest rates. So interest rates coming down. So how was that going to affect buyers and sellers? So on the buy side of transactions, what we could see is interest rates come down. Buyers are able to afford more house with their monthly payment than they were in the past. So we actually expect to see a lot more buyers coming into the market. Now, what we need to take into consideration, and this goes back to the quote that you've been hearing for the past couple of years now, right? We'd rather you go ahead and buy the right house for you. So you're going to buy the house and date the rate, or marry the house and date the rate. So we do believe rates come down. So those buyers that have purchased homes in the past couple of years should see rates come down enough to where it makes sense for them to refinance. Don't do it right away. Talk to whoever your lender is. If you have a great real estate agent, I'm sure they've got connections there for you as well. So those lenders can help give you some guidelines on when it's going to make the most sense to refinance. I don't expect that to be immediately. The ones that are rushing you into doing it now, I think, are gonna have you miss the boat on where they could be, and so what they may try and get you to do is refinance more than once. I think you're better off being a little patient and getting some guidance from your favorite lender to make sure you're doing that at the right time. So the other thing, if we see more buyers come into market interested in purchasing home, we could run into probably not the same extremes that we had in 2020 and 2021. But if we see an increased number in buyers, there's more people out there, you could see home prices continue to tick up. So if you're actively looking right now, I think it would be a good time to try and make your move and really get into something before there's a surplus of buyers in the market, which could drive homes up, or we could get into multiple offer situations, right? So we may not see something where we're getting 15, 20, 25 offers coming in on the same home, but you could still see a situation where maybe you have 3 or 4 people. But even having 3 or 4 buyers in the market for the same home could drive or will likely drive prices up. So we need to pay attention to that and make sure you're making the right move and are prepared to make that move when you're ready. Now, so what does that mean for sellers? So sellers over the past 6-9 months have seen homes sitting a little bit longer. Now, that doesn't mean we haven't had the homes that have sold in a day or two on market, but we have seen quite a few that have been sitting longer. I've probably seen more price reductions in the past 6 months than I have seen in the past 5 years combined. So that'll be an important thing for sellers to watch for. If more buyers are coming on, we should be able to get those properties moved sooner rather than later. So good news for sellers. I still don't think it's bad news for buyers. You just need to make sure that you're paying attention to when you're getting into something sooner, and if it's possible to find that right home for you in your situation, moving on it faster I think could be very good for you, because I believe in the next 3 or 4 months we're going to see a significant number of buyers coming back, start looking again, and that increased supply of buyers could drive homes up. Just wanted to touch base on that. There's a lot of confusion on how that works. Happy to answer any questions. Feel free to shoot me a message or comment below. Be happy to answer any questions. Everybody have a great rest of your day.